The late night, super late. I didn't go live this morning, so doing it tonight. Got to stay dedicated. Funding with bad credit, funding with bad credit. And this is the late night edition. So I'm going to really be able to just go ahead and give y'all the real about it because this is too much. There's too many misconceptions about how funding works, what it really requires, and TikTok and 30-second reels. It just doesn't do anybody any good. It doesn't do anybody any justice. So everyone, I know it's late at night. You'll be able to see this and watch the replay in the morning. But we're going to go through multiple ways of getting some funding with bad credit. I'm also going to educate you on what the truth is about getting funding with bad credit. Because there are truths that everyone needs to know, everyone needs to understand, so we can stop hitting people up and stop expecting people to give you some kind of handout, right? What I want to clear up is this idea of, oh, all you need is a 540 credit score, LLC, and the EIN. That sounds good. It sounds really good, but they're missing a key component out of those three things. Is it possible to get funding with a 540 credit score, a LLC, and the EIN? Yes, but there's a key component that they didn't tell you, or they're not telling you in those TikTok reels. Income. Your business needs to be generating income if you have bad credit. We got to stop with hitting people up thinking you're going to find some kind of golden goose. No banking institution or like institutional lender is going to give a business or person with bad credit and no income money. It's not a thing. That doesn't happen. Okay. I want to just clear that up. So anytime you see any meme, any TikTok reel, any IG reel, any YouTube reel telling you that, oh, I can help you get funding with a 540 credit score, an LLC, and the EIN, they are leaving out information. They're leaving a lot of information out. You need cash flow. There needs to be cash flow. There needs to be income. If you don't have cash flow, you don't have income, you're going to need something of value that you can put up as collateral to seal the deal. Banks ain't giving people money who don't have money. I know it sounds crazy. I know it's a fucked up situation. You thinking that, oh, I need money, I can go to the bank. You can't. Banks aren't designed to give people in need money. Banks are designed to make a profit for the people that own the bank. Banks are not nonprofits. Banks are for-profit institutions. I need us all to understand that. They're for-profit. So if they think they can't make a profit from you, they ain't giving none of us, me included, they ain't giving you no money. So the LLC, the EIN, the 540 credit score that everyone wants to put on a reel just for clickbait. I mean, it's cool, but know that there's extra things involved. You got to have some income showing. Okay. If you have bad credit, every product out there is going to rely on two other factors. They're going to ask you, well, what's your income and your cash flow for your business? Okay, how much cash flow is your business doing? Or does your business have any collateral? Depending on the size and the situation, as an individual, they may ask you, about your house. You can't put up like your house as collateral. Okay. So I need us all to understand that, because I'm working with a lot of clients and they get frustrated about the situation because TikTok be lying. The internet be lying. There's only so much you can say in a 30-second reel, especially since the 30-second reel is only supposed to act as clickbait. It's only supposed to get people to click the link in the bio or to get people to DM you. They're not going to give you the real, the real, REAL, right? They're not going to give you all the information, because once you learn all the information, you may get discouraged. You're not going to reach out to them because it's like, damn, I don't have good credit and I don't have any income. Well, you shouldn't be looking for lending if you don't have good credit and you don't have income. Two things we want to work on if you're in that type of situation is, one, generating income. There are a shit ton of videos on YouTube about how to generate income, right? Another way of getting funding with bad credit are grants. So if you're in a situation where you have bad credit and you don't have any income, but you have a business idea, go for grants. There are a lot of channels that talk about grants. Grants are free, and you can get grants from just about anywhere. There are federal grants that are national. They have state level grants. They have county level grants. They have city level grants. They have corporations like Walmart, Nike, LL Bean, Samsung, Apple. Corporations give out grants. And of course, there are nonprofits that also give out grants. Now, the thing with grants are they're very much so like a scholarship. They're competitive. So there's never a way to guarantee that you'll get a grant or someone that's applying for you, right? You can't really say you can guarantee it unless you know the person that's issuing the grant. That's really about it. But that I would encourage those who may be in a position where you don't have a lot of income and your credit is weak, look into grants. There are a lot of places to get them, right? I do not do grants, but in the spirit of being transparent with y'all, keeping it a hundo with everybody, look into grants. Now, let me get back on the lending side. Banks are for profit. Banks do have grant programs that come from like the nonprofit side, but that's a totally different process than what we're talking about, just immediate lending. All right. So if you don't have good credit, the next thing that we're going to be looking at is your income, that cash flow. To start looking at and getting approvals, banks like to see you in any real lender, whether it's a fintech, right? Fintechs are really good. Some fintechs include Bluevine, Fundbox, Revenue, Capital on Tap, even the Ramp card. All of these, well, not Bluevine anymore. They actually have become more strict and turned into a conservative lender. But fintechs are a great way if your business is cash flowing. I would say at least $5,000 a month. Okay, the more, the better. Because on the business side, when we're talking about business funding, if you have bad credit and we're leaning towards your income or leaning on your income, a bank will generally give you anywhere between 10 to 30% of your revenue. Now, there are other institutions and lenders that will give you up to 100% of your revenue in the form of a loan. We'll talk about that a little later. So that's great if you're already generating 10, 20, 30, 40,000 or more in monthly revenue. We have lenders that will give you 100% of your monthly revenue in the form of a loan. So if you're doing 50 and you need a $50,000 loan, boom, we have opportunities there for that, right? And the great thing about that is they'll do a soft pull on your credit, but the soft pull is just basically just verifying that you're a real human and that you have some kind of credit established. They also use it to establish like your repayment terms and interest rate. Okay. But you need that income, y'all. We can't be out here with bad credit, no income, trying to get somebody to give you money or a bank to give you money. That's not what it is. It's not what it is. All right. Especially when folks are looking for six figures in funding. You're looking for six figures in funding. A bank wants to see six figures in revenue. We have to build it out, and you want to build it out so you look good on paper. That paper tells a story, and we want to craft a story that makes and entices the bank to give you money. So when you're working with someone who's trying to help you get funding, you gotta give them something to work with. If you don't have good credit, okay, cool. You got cash flow? Okay, cool. Can you make it look like you got cash flow? Do you have some credit cards we can liquidate, do some manufactured spending? Can you perform services for your friends and they start paying the business, right? You need cash flow to go into that business so that you can qualify. Now, we're always going to, you can't well, not can't, but since we're talking about bad credit, you need to have that. Another way of getting some funding, even though you have bad credit, is looking at collateral. Collateral is basically anything of value that you may have that you can put up for the company to basically use as like a backup, just in case you're unable to pay them back or the business is unable to pay them back. They're like, okay, boom, we have this other thing of value that we can take, sell, and then get some money back. Because remember, banks are for profit institutions. They are not charities whatsoever. They are not charities. I know it's hard to think, but they're not. They're not charities at all. Their job is not to help us when we're down. They don't want to help us when we're down. So we always have to keep ourselves in a position where it looks like we're up on paper so that we can always be in position to get access to the money from a bank. Now, if for some reason you're not in position and you know you're not in position, then that's what we need to talk about. We need to talk about, well, how do you get into position? One, of course, you're going to improve your credit. Two, we're going to increase the cash flow, the money that's going through into the bank account and by way of deposits, right? So that means selling more, making more content, being out in the public, networking with people. You need that income coming in. No real, even the government and IRS says that your business isn't generating a certain amount of money a year, then it's not actually a business. And the IRS will actually just consider it a hobby. And I think it's something like if your business does less than 20,000 a year or something like that, then they just consider it a hobby. And so all of those tax write-offs that we were taking advantage of, they stopped issuing and giving you those tax write-offs because they're like, well, your business not making money. You must not be taking it seriously. So they will literally audit your shit and be like, nah, you don't have a business. You just got a little hobby that you do because you're not even making money from it. They'll literally do that. Okay. I know people that have been audited for that reason. I know that was off topic, but it was kind of in topic because taxes do play a part when we're talking about getting funding. All right. And when I talk about funding, I know a lot of people just focus on zero interest credit cards, but funding is bigger than that. It's so much bigger. We have revenue based financing. You can get funding operating, buying vehicles, right? We have commercial real estate. Okay. There's also if you have an inventory based business. So maybe you do food delivery, not food delivery. Maybe you manufacture food, or you have a store, you have a grocery store. They have funding specifically for inventory. Okay. And there are instances where you can use your inventory to get more funding. Inventory can be a form of collateral because it has value, right? You're selling it to earn income. So, some ways of using collateral, things that can be used as collateral, a vehicle that's in your business name counts, inventory that your business has counts, stocks count, bonds count, um, your retirement accounts. Okay, you can actually put up your retirement account as collateral to get more funding. Depending on the size of your retirement account, you can even borrow directly from your retirement account. You could take a loan against your 401k. You can take a loan against your IRA. You can take a loan against your TSP if you're government, right? You can also what's the one if you're a teacher is not a 403b. 403b is a that's a renovation loan. What is it called? 40 I forgot. If y'all know what I'm talking about, if you're a teacher, a public servant, they have their own retirement funds as well. You can borrow against all of those retirement accounts. And the great part is that with a retirement account, you can use it as collateral, or you can just straight up borrow against it with no credit check whatsoever. So if you have bad credit, you don't even have to go looking too far. If you have a retirement account, then you can just borrow straight from your retirement account. A lot of people don't realize that they can do that. And it's super easy to do. A lot of times, as long as you stay, if you're doing a retirement account and that retirement account is through your employer, as long as you remain employed, then they'll just take it out your check and you are literally just paying yourself back. Even all the interest goes right back into your own retirement account. So it's one of the best ways of funding yourself, even if you have bad credit. If you have a retirement account, you essentially always have some access, some level of access to funding or lending because you act as your own lender. You're backing yourself, right? The other thing is, when we're talking about cash flow, because I had this conversation with one of my clients, um, they already do about 30,000 a year. They own a store. So far, we've gotten her $40,000. And before we started working together, she was having issues because she didn't have stable cash flow. When you have bad credit, we have to make sure that everything else looks good. That includes stabilizing your cash flow. I know this isn't the sexy talk that everyone wants to hear. I'm not on here I don't even got nothing to sell you. I'm not hopping out no Lambo. We ain't running no scams, no play. I'm giving y'all real lending business right now. Real lending. Because that first 100, 200,000 in funding, if you don't know what to do with it, it's going to go by real fast. It's going to go by real fast, and you're going to be in a situation where you're trying to recoup from everything, from all the L's and mistakes that you made from that initial six figures in funding. And I want you to avoid that. One of the best ways to avoid that is cash flow. Okay? Because when you borrow the money, they expect you to pay the money back. You want to be focused on building up the cash flow 100%. When your business is making money, there's always somebody who's going to be willing to give you some money if they see you making money. Everyone loves to hop on a moving train. So it's very important. Not only making the money, stabilizing it. Work with a professional. There's nothing wrong with use. I mean, QuickBooks. Hop on QuickBooks. Connect that shit up. You know what I'm saying? They have a lot of AI. They have a lot of different AI tools now that can help you stabilize your cash flow. If you're like you can't afford an accountant, that's cool. A lot of people can't afford an accountant or bookkeeper when you're starting, but they have software to do that. They have software to integrate directly with your point of sale system, right? Whether it's Square or PayPal or Stripe, whatever. There's a lot of them. Authorize.net. Get a software that can show you the holes in your cash flow so you can smooth that out. When you smooth out your cash flow, that opens up the opportunity to even more lending. When we're talking about lending with bad credit or getting your business funded, even though your credit is bad, everything else needs to look good. That cash flow, they're going to scrutinize your cash flow. They're going to say, oh, your cash flow is a little, like if you're swinging between 20,000 and 70,000 every other month, that's huge. We got to figure out how to stabilize that so we can get you more access to funding, right? When a bank or even a lender tells you why they didn't approve you for a loan, is once after you take the L, right? You take it on the chin, you get over that initial sting. Actually, listen to what they said, right? Because when you ask them, they'll tell you. They'll say, "Oh, you have too many hard inquiries. Oh, your debt to income ratio is too high. Oh, you got a recent late payment. Oh, your bank account isn't old enough, right?" Take that information and literally use it to get yourself approved. Once they tell you exactly why you were denied, that's your ammunition. Now you know exactly what to fix so that you can get approved. It's literally the cheat code. They're going to say, hey, we denied you because your cash flow isn't stabilized. Okay, bet. That means we stabilize your cash flow. Is not a secret no more. There's no secrets as to why you were denied. It's not, oh man, I was denied. Nobody wants to help me. Nobody wants to give me money. Take what the bank or what the lender is telling you and just fix it. If you don't know how to fix it, work with somebody who can help you fix it, even if it costs money. What's a couple of $100 if you're trying to get 40, 50, $60,000? Why not pay somebody $300 to help you get 50 to $60,000? Especially when that's going to help your business stay afloat, or it may even help you start a business, get the funding for the business, right? When we're talking about adverse actions, right, that's those denial letters, they give you the secret sauce. Use the secret sauce. A lot of a lot of the information that I gather and others in the funding credit world, they come from reading the denials. We share that information. Someone says, "Oh, I was denied because my debt to income ratio was too high." That's a data point. That's a data point. You can say, "Oh, okay, this bank pays very close attention to this debt to income ratio. Okay, this what was your debt?" And then you can start having conversations with peers. Okay, what was the debt to income ratio? Oh, 45% on a BLOC from Key Bank. Okay, I got to keep my debt to income ratio below 45%. That's something that you need to know. Every time you're denied, and here's another tip, uh, a denial right now in the world of credit is not a denial forever. Most banks only keep your application on file for 30 days. So you can apply for a bank, get denied, and then just fix the issue, whatever they denied you for. Come back in 30, not 30, come back in 45 to 60 days, reapply, and get approved for the exact same thing that you were denied for a month and a half earlier, 2 months earlier. Happens all the time. I was denied. I've been denied for multiple cards the first time around. I asked them, what the hell, what you denying me for? They told me. I went back and fixed it, and then I got approved. Not a big deal. Not a big deal at all. You just have to be aware that whatever they tell you is fixable. Everything on your credit report is fixable. Everything that they see about your business is fixable. It may not be an immediate fix, though. That's the other part. We have to be okay with, we got to be okay with things taking some time. Not everything's going to be a quick fix. Not everything's going to be a quick turnaround. It's okay if it takes another 2-3 months to get yourself in position, because once you're in position, now you can open up the floodgates to 5 figures, 6 figures, 7 figures worth of funding as you continue to grow over time. Absolutely nothing wrong with that, right? Absolutely nothing wrong with that. So some lenders that you can check out in some ways that you can get funding even if you have bad credit. We're looking at one is called revenue-based financing or revenue-based lending. What this is exactly what it sounds like. They're going to lend money to you based on how much revenue you're making. So some of those include, like, your payment processor offers loans based on how much revenue they see you generating through your Stripe account, through your PayPal account, through your merchant account. Typically, what's going to happen is that they want to see your transactions for at least 6 months before they make an offer. And so basically, your payment processor is always looking at your volume, the volume of sales going through there daily, really. They're tracking it daily. But every 6 months, they're going to give you a new offer. That offer can be anywhere from like 10 to like 60% of whatever your monthly revenue is. All right. Some go up as high as like 80% of your monthly revenue. They don't want to give you 100% because, of course, they want to make profit. They want to get paid back. So a lot of these revenue-based financing, if you're doing it through a payment processor like Stripe, Square, maybe your actual bank has it, they're going to take a percentage of your revenue as you make payments on your as revenue comes in and orders come in, they're going to take a percentage. Even like if you are doing a digital product, like Gumroad is very good with this. It's not exactly a loan, but for instance, with Gumroad, you can use it totally for free. There's no upfront charge, but they do take 10% of every transaction. That's how their fees work. Another example is Stripe. Stripe will offer you a loan. If you accept it, in order to pay it back, they're going to take about 20% of every transaction that comes through. So yeah, you may qualify for a $40,000 loan. You'll be able to take that cash, immediately put it to use, and then they just simply take their cut on the back end, right? It's a great way to get access to capital, even with bad credit, because they don't check a credit score whatsoever. They don't even care what your credit score is. Only thing they care about is how much money is coming through this bank, coming through this Stripe account. That's the only thing they care about. They don't care about your credit report. They don't even ask you what your credit score is. They only care about the money flowing through that Stripe account, right, via credit cards. Then we have other banks that do merchant cash advances, which is another type of revenue-based finance, where as long as your business is anywhere from 6 months to a year old and you have at least 3 months bank statements to show, they're going to be able to make an offer for you, right? With this, though, to qualify and get better terms, we're going to be wanting to have around $10,000 in monthly revenue, right? Monthly revenue. So if you're doing that, you're doing 5 figures or more a month. MCAs are cool because they'll give you up to 100% of whatever your monthly revenue is. Once they do that, then you just have your payback period. It could be a daily payback period. It could be weekly. It could be monthly. All right. I would not recommend doing a daily payback because that can do more harm than good, especially when they have the crazy interest rates. All right. One good thing about MCAs is they may start off pretty crazy, like daily payment, repayment terms, and even over 100%. But as you build a better relationship with them, they're able to lower and give you better repayment terms, right? So instead of it just being daily, it may turn into weekly, or it may even turn into a monthly repayment situation. Another way of getting funding, even with bad credit, is if you have inventory. Now, of course, this is inventory in your store, and a lot of these inventory loans, they're going to be looking at massive, huge warehouses worth of inventory. It could be like $1 million or more, where this type of financing is available to you. Okay. Another another way of getting financing, even with bad credit, is through vendor credit. Now, vendor credit is when, let's say, you have a store and you want to get inventory from Sony, right? And Sony is like, okay, this is going to cost $100,000. And you're like, damn, I don't have 100,000. How about you just loan it to me? You'll Vendor financing is literally they're fronting you, for lack of a better term. They're fronting you to work, right? So they're going to front you the merch, send you an invoice, and then you pay them as you sell the merch. This is how every major store operates, basically. Kmart did it back in the day. Sears, I know I'm aging myself by saying that. Today we're talking about Walmart. Walmart is so big that they can actually negotiate amazing terms with their vendors because they have such a large reach and they order in such massive quantities that the lenders don't mind fronting them the product and then giving them upwards of 90 days to pay it back. That's done on vendor credit. Vendor credit, they don't check your personal credit. So it doesn't matter what type of credit score you have. It doesn't matter if you have a 540 or what. What will matter is that your business is structured properly. You're established. You have some business. You have a business bank account, right? And you even may have some business credit. Okay, and some have additional requirements, right? Each lender is a little different. You may even have something called floor plan financing. A lot of car dealerships use this level of financing, right? All of these types of options exist for you even when you have bad credit. So it's really about being able to build out and understand all the different types of funding that's out there for you and being able to leverage it for your business. One of the key things we want to make sure that you're absolutely to take full advantage of all these opportunities is that your business is structured properly. Your business is structured properly. In some instances, you even have to build out business credit. So that includes vendor credit. That includes paydeck, having a paydeck score or IntelliScore, right? Some accounts that you can use to build up your business credit just from the jump, from zero. You have eCredible. You can use them. You have NAV, and NAV now has NAV Prime, which is basically you pay like $50 a month and they'll report 2 trade lines onto your business credit. So between eCredible and NAV Prime, you're now at 3 trade lines on your business credit. That will at least give you a paydeck score. May not be at 80 yet, but you're at least in the in the range now where you have a paydex score. And a paydex score, you can use that to get funding from other businesses. That's like the start of building up your business credit, so you're not reliant on your personal credit. Sorry, I had a little loss in my thought right there. Boom. Along with that, and I'm just reading my notes. Right. So NAV Prime gives you two. Then you have other vendors that will offer some credit to you for your business. They have, if you wanted to do branded clothing, there's the Creative CEO. There's also, I think it's called T-shirt Company. I think they also offer business credit, vendor credit towards businesses. These are going to help your business stand out when it's time to get vendor credit. Also, gas cards will help you. So the cool thing about gas cards, there are tons of gas cards. Almost every gas station offers some kind of fleet card. So Shell, BP, Exxon, Mobil, 76, any of them, right? Any of them will offer a fleet card. Fleet cards help you build up your business credit as well. And after a year or so of using the fleet card, it can unlock into a general use credit card. People don't know that. It doesn't have to stay a gas card forever. It can actually unlock and turn into a general purpose line of credit, just like if you have a Visa or MasterCard. But it's going to take a year of using the card and paying it off on time before you can unlock that. A lot of the things that people talk about when it comes to business credit, it takes time. It takes, generally speaking, 6 to 12 months to build out your business credit to the point of not needing to rely on your personal credit. Because there are tiers, and you have to work your way up from 5 all the way up to about 15 or more trade lines. The more trade lines you have on your business credit, the stronger it will be, and the less likely you are to rely on your personal credit. This is how people end up buying homes strictly on business credit. This is how people end up buying cars and financing vehicles strictly on their business credit. It's built out, but it takes time. It takes time to do that. And I want to preface that it's not a get rich quick. It's not a fast thing. And it's okay that it's not a fast thing. But the point is that you can actually get it done, right? So these are multiple ways of getting funding while you have bad credit. We went through about 6 or 7 different ways that we can do it. Okay. It's a lot to get into, is way more than I really even have the energy to do. But I definitely wanted to come on here, share some of this, and just keep it real with y'all. Like I'm not here to sell a pipe dream. If you have bad credit, you're going to need collateral, or you're going to need cash flow, or you're going to need business credit. Those are the 3 things you need: cash flow, collateral, business credit. If you have one of those 3 things, then you don't have to worry about leveraging your personal credit. But you need one of those 3 things. If you have all 3 of those things, then you're definitely in a much better position. Now, the absolute best position to be in is to have good credit. Like, I'm not going to be on here and say you can just ignore your credit. You can't. Unless you make so much money that you can just pay for everything in cash, like you're a multi millionaire, your personal credit is going to come into play at some point in time throughout your financial journey. So I highly encourage everybody, while we're doing these things where we can get funding to get the business kickstarted, without using our personal credit while you're growing your business, it's very smart to have a team of people or somebody working on your personal credit and improving it, so that that will add an extra layer of what I call protection. Protection from what? Anything. Anything can happen when you need to hurry up and go borrow 10, 15, 20, $30,000 from the bank, right? I was talking to some good people who have in developing a tequila brand, right, in the DMV area. They were like, man, Jamal, all we need is just, man, if we just had a $10,000 credit card, that would be great. And I'm like, that's it? That's all you need is a $10,000 credit card? Like, that's easy. It's not hard. It's not hard to get a $10,000 credit card. But they couldn't apply, they could not qualify for one because they didn't have good credit. That's just what it is. You're going to reach a point where there's only so much cash flow that you have. There's only so much collateral you can put up without them saying, hey, what's your personal credit score? Or, hey, you may have to do a personal guarantee for this loan, right? For instance, SBA loans. We haven't talked a lot about those, but SBA loans are full doc situations. They're checking your business credit. They're checking your business formation. They want to make sure you have a business bank account, and they're going to check your personal credit. And SBA is the Small Business Administration. All they do is focus on helping businesses develop, and they still check your personal credit. So I would be remiss if I got on here and said, oh, don't worry about your personal credit. It's fine. We could just ignore it. We can't. We can do things. We could put plans together so that we can still help you get the funding that you're looking for, even though your personal credit needs to be developed some more. There's nothing wrong with that. It happens to everybody throughout their journey as you're learning, but we can't move about it the wrong way. If you want maximum funding, we want to make sure that we have all of these things in place. All of these things. So get your personal together. If you don't have personal, we're going to need credit. We're going to need collateral. You're going to need cash flow. We're going to need business credit. All right. As always, remember to like, subscribe. If you have any additional questions about your exact business, your exact industry, what options are available to you, definitely check out the description of this video, the description of the channel. I have many different links that you can take a look at, even a link to book a 30-minute consultation so we can discuss what funding opportunities are best for you and your goals. In the meantime, in between time, I'll talk to everybody later. Y'all have a great one. Peace.